The year is 2025, remember the trade war? It feels like a lifetime ago. But back then, the market was a battlefield. Tariffs were flying left and right. American companies, especially our beloved tech giants, were caught in the crossfire. The cost of doing business was skyrocketing. Supply chains, those intricate webs that span the globe, were in chaos. Uncertainty was the only certainty. Investors were nervous. The bulls were hiding. The bears were having a field day. The tech sector, usually a beacon of growth and innovation, was hurting. Margins were squeezed. Profits were dwindling. The future looked bleak. Apple, the maker of our favorite iPhones, was feeling the heat. Dell, the computer behemoth, was struggling to keep pace. Something had to give. Then, a break in the clouds. The office of the U.S. Trade Representative, after months of deliberation, threw a lifeline to the tech industry. They announced tariff exemptions for key components. These weren't just any components. We're talking about the building blocks of our digital lives, printed circuit boards, the nervous systems of our devices, display modules, the windows to our digital souls. These exemptions were a big deal. Suddenly there was light at the end of the tunnel. The cost of manufacturing these essential components in China, where so much of it happens, would go down. American tech companies could breathe a little easier. The news spread like wildfire. The market, always hungry for good news, was about to go wild. The impact was immediate. Tech stocks, battered and bruised from months of uncertainty, surged. Apple, the bellwether of the tech industry, saw its stock price jump almost 4% in a single day. Dell, no slouch itself, experienced an even bigger leap, with its stock soaring over 5%. It was a tech rally for the ages. The bulls were back in town. But it wasn't just the big boys who benefited. Smaller hardware manufacturers, the unsung heroes of the tech ecosystem, also got a much-needed boost. The exemptions were a shot in the arm for the entire industry. The trade war wasn't over, but at least there was a fighting chance. Why were these exemptions such a big deal for Apple and Dell? Let's break it down. These companies rely heavily on global supply chains. They manufacture components in China, assemble products elsewhere, and then ship them all over the world. Tariffs disrupt this delicate dance, adding costs at every step. The exemptions meant that Apple and Dell could continue to source components from China without incurring those hefty tariffs. This translated into real savings, millions if not billions of dollars that went straight to their bottom line. Investors cheered. Analysts revised their earnings estimates upwards. The future looked brighter. The tariff exemptions were a masterstroke, a reminder that even in the midst of a trade war, cooler heads can prevail. But let's not kid ourselves. These exemptions didn't just fall from the sky, they were the result of a concerted lobbying effort by the tech industry, a classic case of Washington influence peddling at its finest. Apple, Dell, and other tech giants spent millions of dollars courting lawmakers, making the case that tariffs were hurting American businesses and consumers. They argued that exemptions were needed to protect American jobs and maintain the country's technological edge. And guess what? It worked. The Trump administration, despite its protectionist rhetoric, recognized the strategic importance of the tech industry. They understood that tariffs, while perhaps effective in some sectors, were backfiring when it came to technology. The exemptions were a victory for common sense, a testament to the power of persuasion, and a reminder that in Washington, money talks. Riding the wave, how traders caught the $100 billion comeback. For savvy investors, the tariff exemptions were a golden opportunity. Those who had done their homework, who understood the intricacies of global trade and the importance of supply chains, saw the writing on the wall. They knew that exemptions were likely, and they positioned themselves accordingly. They bought Apple and Dell stock when it was down, betting that the market would eventually recognize the value of these companies. And they were right. When the exemptions were announced, these investors reaped the rewards. They rode the wave of the tech rally, watching their portfolios swell with each passing day. They understood that in the stock market timing is everything, and they timed it perfectly. Lesson 1. The importance of staying informed. So, what can we learn from this $100 billion comeback? What lessons can we glean from the trenches of the trade war? First and foremost, stay informed. The world of finance is a dynamic, ever-changing landscape. Policies shift, regulations evolve, new players emerge. To succeed, you need to stay ahead of the curve. Read everything you can get your hands on. Financial news websites, industry publications, analyst reports. Knowledge is power. Don't rely on rumors or hearsay. Get your information from reliable sources, understand the forces that drive the market, the geopolitical events that shape the global economy. The more you know, the better equipped you'll be to make informed investment decisions. Lesson 2. Navigating the labyrinth of global supply chains. Second, pay attention to supply chains. In today's interconnected world, companies operate across borders. They source raw materials from one country, manufacture components in another, and assemble products in yet another. Understanding these intricate networks is crucial for assessing a company's vulnerability to disruptions. Look for companies that have diversified their supply chains, that aren't overly reliant on a single country or region. Consider the political and economic stability of the countries where a company operates. A well-managed supply chain can be a source of competitive advantage, while a fragile one can spell disaster. Lesson 3. Following the money trail. Finally, follow the money trail. Pay attention to lobbying efforts. Companies spend vast sums of money trying to influence government policy. They hire lobbyists, make campaign contributions, and engage in public relations campaigns to advance their interests. By tracking these activities, you can gain valuable insights into potential policy changes that could impact a company's bottom line. Are companies in a particular industry lobbying for tariffs or exemptions? Are they pushing for changes in environmental regulations or labor laws? The answers to these questions can provide valuable clues about the future direction of an industry. By staying informed, understanding supply chains, and following the money, you can position yourself to profit from the inevitable twists and turns of the market.